Hello, everyone. This is Sebastian McMahon from IA Financial Group, and this is the weekly economic review for the week ending November 5th, 2021. So, a busy week. We had the Fed on Wednesday, so the Federal Reserve, the US Central Bank. So, just maybe a reminder on the ia.ca/economy webpage, you have the Economy and Finance 101 section, and there's a video on central banks and monetary policy. So, I'll strongly encourage you to give it a look to better grasp what's going on with central banks right now. But the Fed on Wednesday announced that they will be starting to taper their QE, their quantitative easing program, starting in November, so all the way through June of next year. So they will be starting to fade away QE. But rate hikes, they will be patient. They repeated that word often, and probably it's later in 2022 or even in 2023. They want to see more progress from the labor market. So rate hikes are not yet imminent, but the end of QE is appropriate right now. So we'll discuss that in a minute. And on Friday, today, November 5th, we had the jobs reports on both sides of the border. The US beat expectations in October. Canada, we were below expectations, but still we'll look at some charts that show that the Canadian labor market is on much stronger footing than the one in the US. So let's take a look at a few charts. All right, so as you can see on this chart right here, it's still advantage Canada when you look the overall performance of the labor markets, but we did have a beat in the US. We had 531,000 jobs added in October in the US. Expectations were for 450,000. In Canada, we were a bit below expectations at about 31,000 jobs added. All in Ontario and BC, other provinces were flat to negative. So the picture here remains pretty clear that since February of 2020, everyone pulled back. Canada rebounded with a lot of strength. Now we're above the February 2020 level for Canada, and we're still close to 3% below for the US. So strong advantage. And another way to look at it is through the hours worked. So there's two charts here, and the conclusion of these charts is that the Canada is outpacing the US by a factor of 2 to 1 in terms of growth, because hours worked are strongly correlated to the growth in GDP. So on the left, you have Canada, and what I did is that I looked at the 3-month change in percentage, and we annualize it. So when you hear about GDP growing 2% in the third quarter of 2021 in the US, like it really happened, that's an annualized pace of growth. So we annualize it to have a comparison. So here what you have is that in August, September, and October, these 3 months, we had a growth rate compared to the 3-month period before that was 10.7% for Canadian hours compared to 4.9 in the US. So that shows how strong the rebound and the momentum of the Canadian economy is right now. So we would not be surprised if we had an outperformance in Q4 from the Canadian economy. We have a stronger pace, and we do think in this context that the Canadian dollar should be sustained and should be much higher than it is right now. So we're very bullish on the Canadian dollar. Financial markets, very quickly here, the Fed, as I mentioned, started to taper its bond purchases. It's starting to pull back the aid from the pandemic. They are very patient, as I mentioned. The market was pretty much ahead of itself, pretty much everywhere in the UK, in the US, and Canada. Market is expecting central banks to start hiking very quickly. They pushed back on that, so being careful, being patient, and waiting for more developments on the labor market, which, as we just showed, is still pretty slack. So still favors equities over bonds, although this week, if you have strong growth, you have wages that are not pushing too strongly, you have the Fed that remains there, that's still very bullish for equities, so we're still bullish equities. And on this week, we had a pullback in interest rates. That meant that you have a positive return on bonds, so there could be more of that as the market continues to deprice further accelerated action here from central banks. So that remains a very Goldilocks kind of environment. So to follow us, ia.ca/economy. As I mentioned, Economy and Finance 101. So I would encourage you to go take a look if you haven't done so already. If you want a copy of this presentation now, instead of writing to us and we send it to you, go on LinkedIn. I post it early in the morning on LinkedIn, so you have it before the video. You can download it, you can look at it. So connect with me on LinkedIn if it's not already done. You'll see it there, and if not, just go find me on LinkedIn and I'll post it in a few minutes. So before this video reaches you. And if it's something that you like, Twitter, you can follow me there. I send small bites of informations, charts, analysis all through the week at SebMcMahon_IA. Strongly encourage you to give me a follow here. So thank you everyone for your trust. Thank you for your business. And I'll be back next week with another edition of the Weekly Economic Review.